Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 5 trade ideas to share with you towards the end of the video, so stay tuned. Jumping right into our S&P analysis, starting off with the sectors as we always do. Who was leading, who was losing, and where was the weight? Well, the energy sector led the pack today, up to the tune of 3.75%, whereas utilities were down at the bottom of the barrel, down 0.13%. While neither of these really make up a significant portion of the S&P in terms of weight, it is noteworthy to at least mention that utilities are seen as a risk-off asset, and being down today, paired with a green day in the S&Ps, generally bodes well for a little bit more confidence in that move. That's my 2 cents on the XLU, but also just noting that a majority of the sectors were green from the prior day's close, and all of the sectors were green from the open, right? That is noteworthy here, this column measuring from the open, not so much the prior day's close. Let's take a look at the heaviest weighted sectors, though. As we know, that's the XLK, the heaviest weight for tech, pretty much up 0.88%. XLF, the second heaviest weighted sector, just above that, shy of 1% to the upside. And then the XLV, just below the XLK, up 0.65%. Let's check in on some of these charts now and just make sure that none of them are posing mounting risk in one spot versus another. The XLK still looks fine to me. Slight little pullback here. We are falling out of this prior area of balance, but we're supporting at this prior low right in here, which does still strike me as bullish, right? If we think of this as the dominant low, so we'll call that big L for major low, this would be a HL for, of course, higher low. We can essentially afford to pull back into this breakout point, remembering that that's coming from here, the 154.52, and still be considered in a higher low, nice uptrend here. And even if we turn early, right, that would just be a stronger sign of strength from the buyers and a lack of strength from the sellers, of course, if they don't take it all the way back down to this 154.52. And obviously the next thing we would look out for would be a higher high to then afford the next higher low pullback. So risk not really mounting in the XLK. We'll talk more nuance when we get on over to the QQQ. Next up, we'll take a look at the XLF for the financial sector. And this one starts to raise a little bit more of a question mark, right? Obviously, we're just ranging in between the highs and lows here. We didn't really put in that ideal higher low that we discussed in some prior videos, but it's not the end of the world, right? Technically, if you want to get really granular and nuanced with me, yes, this is a higher low from right here, but I would just argue, again, this is more rangy activity, not so clear that it's in an uptrend. I would just call it sideways at best right now. What we're wanting to see, of course, is just a hold of this 37.21 on any further tests. If we can do that, then you, of course, would just look for a move to the top of the balance back up towards these highs in here closer to 39. So as of right now, it's not the strongest uptrend, but it's also not signaling complete breakdown inside of the S&P. So just keep an eye on it. While we're talking about financials, let's take a quick look at the TNX for the 10-year rate. And there's not really much to talk about here. There hasn't been for quite some time. So I'm sort of inclined to leave this out of the video going forward unless we get into those inflection points, which, as we know, are going to be the 15 handle up here and the 12 handle down below. So let me know in the comments section if you like taking a glance at it in these videos. Should I include it only if there's a major update? Just give me some feedback down below and we can adjust accordingly going forward. But as you know, no real updates to bring you here as this moves higher. Bodes well for the XLF as it moves lower, bodes better for the XLK, and inverse relationships as well to both of those sectors. Let's take a look now at the final and third heaviest weighted sector that we generally take a peek at. That's the XLV for healthcare. And what you'll notice about this is, again, it's not overly bullish, but it's also not overly bearish, kind of more similar to that XLF, ranging in between these areas in here. As long as it holds on to this number right here, the 131.74, and I would argue just the general 50 SMA kind of uptrend, I'm sure you could draw on a support trend line, right? Something that might look like this. We're kind of at and resolving it right now. As long as we hold on to this area, I would remain, more neutral as opposed to bearish here on the XLV. But again, if we do break down underneath that 131.74, that's where you flip your stance and say, okay, maybe there is some more downside to be had inside of the healthcare sector. But until that happens, no use in really speculating. For now, really just watching to see if we can get acceptance back into this overall area right here. So that would be my main thing to watch, that 133.75. If we can get back into it, I would imagine that bodes well for the S&Ps continuing to sort of rebound, if you will, from their pullback, which obviously we'll get into here in just a moment. But before we do that, let's take a quick peek at volatility. So the VIX, of course, is going to be the measure of volatility in the marketplace. And the main thing that I want to talk about today is the lack of acceptance over the 2050 on this sort of grindy move that we've seen lower here. And it's just signaling to me that this isn't really a volatility event, right? So whenever you see a volatility event in the marketplace, generally that's a pullback that you want to buy, right? It's simply volatility, people panicking panicking, they panic sell, and then you can come in, grab it at the 50 SMA support trend line, wherever it happens to turn, and generally, right, you'll see that snap higher. But because we didn't see that here, this didn't, do something like this, it has me thinking, and again, this is just one data point. It doesn't mean that the structure of the market's going to change indefinitely, but it does have me thinking at least that, if this wasn't a volatility event and it was really more controlled selling, then, are people starting to maybe unload some positions? I don't know. It's something I'm thinking about. And again, volatility here is only acting as one data point. It's not like we put all of our analysis eggs in one basket here, just something to monitor, right? I would have been much happier to buy the deep pullback, the aggressive pullback, if it was confirmed by a volatility event, and kind of just, one more point for the sort of bears, if you will, having me more skeptical now that this is sort of proving it's not a volatility event, right? We never came underneath this area right here, that 2050, which, as you know, is the area where we start seeing those sort of panic sell-offs. So as of now, just more of a question mark here in the VIX, not really counting it as a huge, stay away signal, but, just a little more skeptical than I would have been with one of these massive spikes like we've seen in the past. So all that being said, let's jump on over to the S&Ps and talk about the move that has essentially unfolded over the past couple of days here. And the first thing that you'll note, we'll talk about this and get this out of the way, of course, is the fact that the gap has filled from that 445 down to that 443.71. So that's no longer going to act as a target or, an area to monitor for. And I would really keep a closer eye on the 2-day lows, which are just underneath the gap fill area. So, certainly the gap fill area did work, right? It did what it was supposed to do. But now going forward, if you're going to see a breakdown point, it's simply, it's not this 443.71. It's slightly lower. So I wanted to adjust that with you guys together here. So we'll drop that level down just a hair. And I would really watch closely that 443.45, 443.50-ish area as the breakdown point that could lead to lower if it's revisited. But that brings me to my next point, which is look at the activity of the selling here. And we sort of alluded to this when we were discussing the VIX and kind of this grindy move lower. The fact that we had big expansion of range lower, there was no follow through the next day. We made a very incremental lower low in terms of, relative range here. Same thing on Tuesday. We did see that expansion of range, right? It's technically a large range bar, but we only made a very small lower low. So to me, this is kind of a signal that sellers are kind of running out of bullets, right? They have to keep putting in a lot of effort just to get very incremental lower lows. And today was the first day where they were actually not able to make a lower low, and thus the market sort of rallied. Now, we didn't make a higher high, don't get me wrong. It's equal highs here, and we didn't take out anything up above, but it's the first step in sort of confirming, hey, these sellers are gassed, the buyers are ready to step back in and really get it going back towards the highs. So I would say if we can start taking out these 2-day highs, that would be your signal for the long, essentially. But there's a very important point. Don't forget that our 449 was a pivotal point, right? Really, in terms of the breakdown really starting. That's where it stemmed from down below. We rejected there. So I'd keep a close eye if we do get the break of the 2-day highs just on that 449. And then from there, there's that room to clear back up towards the bottom end of balance and then all-time highs back in here. So, we didn't make it all the way to the 50. Ideally, we would have, but we did fill the gap. We did not form a new lower low today. So this could be the shift early in what's going on in the market. Let's go ahead and take a look over now at the internals. If you're not familiar with this screen, go ahead and get familiar. Top right-hand corner is going to tell you what this all is, how you can set it up, and how it will help you make better trading decisions on an intraday basis. First thing to note is that, of course, on Monday's activity, when we made that very incremental lower low, it was kind of a grind lower, the volume was actually positive, right? We only really had bad volume and, bad in terms of strength for the sellers on the Tuesday session where, I'll give it to them. It was fairly hot and heavy selling. All the pops were essentially sold off in a more aggressive manner. So they had it there, right? But for now, what we're looking at is a higher move today with higher volume. So everything's confirming here, except for that Monday session, which I would argue is wiped away based on these 2 days here, 1 and 2. So nothing's kind of out of whack with our internals from that perspective. Same thing with the ADDs. Obviously this was just cutting like hot, a knife through hot butter here to the downside. On that Tuesday session where arguably, that's what it should have done. And today, right, we did rally off the zero line. So again, no divergence there. Same thing, but sort of different in the tick. And this is where it gets kind of interesting. As the sell-off sort of started to happen, I was just monitoring that this was kind of a shaky sell-off in my opinion. Note that the cumulative build down here is across the zero line on almost every day of the sell side activity, which would tell you that across the entire marketplace, it's not like everything was selling off one of those days. days. Now, don't get me wrong. On some of those days, like this period right here on Monday, there was certainly some selling there where, it was across the entire market. On Tuesday into the end of the day, same thing there. But at any given point during that day, it's not like it was sustained from the 9:30 bell all the way until 4 o'clock close. So to me, again, just sort of that was a little bit divergent between what was going on across the broad market and what was happening here in the ES or S&P futures, right? Of course, today's action, the big trend day to the upside, the reversal rally, punctuated by a really strong cumulative build, not spending any time underneath that zero line, does strike me as what should have happened here. We'll see if we can carry this momentum into the remainder of the week, which brings me to my next point. Of course, let's maximize these futures. And the thing I want to point out is if we scrunch this chart up, actually, let's grab some more time here. We'll go with something like a 10-day, and we'll go with an hourly. There we go. And what I want you to notice is obviously we were in a downtrend here. So what you can do is draw in a couple of resistance points. You could do something like this. You'll note we're right at that one. Or you could do something like this, right? And if you do this, you'll note that we actually broke that resistance trend line. So I do think there could be a shift in sentiment here, and we'll talk about this in a second as we get to market profile. But just note that, as we break this resistance trend line, we're now going to be putting in higher highs. The next step would, of course, be, as we always discuss in our S&P sectors, pulling back for a higher low, confirming that higher low, and then returning and resuming the daily uptrend, right? So it's all going to stem from a lower time frame break of a resistance trend line, notably the last one we have to break here, coming in from the all-time high, essentially, to touch 1 and 2 right here. We'll see if that resolves into the end of the week. That might be a signal to you as a black and white area for if we break above, okay, start favoring longs again. If we remain underneath, okay, still either neutral or maybe looking for shorts back down into some of these most recent lows. That being said, let's go ahead and take a quick look at the market profile. If you're not familiar with this software, I've got another video for you. Check it out in the top right-hand corner. It'll tell you what this all is and some of the terms I'm about to use. But what I want to talk about is the same sort of thing that I was talking about on the S&P daily chart when we were discussing sellers kind of running out of bullets, right? If you notice what's going on with value here, none of our days of value were actually like incredibly breakaway to the downside, right? So this was the first big day of selling. The overnight session value was actually overlapping. The day after that, I'll give it to him there. It was, breakaway to the downside, not overlapping. But in the overnight session that followed, above to overlapping. The next day, below to more overlapping. And on today's session, certainly more overlapping here. And I would argue that this is a double distribution. So let's go ahead and take a closer look at that. If you see what happened on today's session, obviously there was some time spent down here in the morning as we built that ascending triangle. The breakout, though, led to poor structure in the middle and then a distribution up on top. So the question you should be asking yourself as we move into the remainder of the week is, do we accept in this upper distribution here, or do we break down and get back into this lower distribution here? So some areas to keep in mind, some numbers that I'll give you, is that if we break down the sort of bottom of the upper distribution, if that makes any sense, is right around our 4460. So use this area here as an area of support. Again, that's 4460 on the ES. If we break down underneath that, you would essentially look for these single prints here to fill to the top end of the lower balance area, which would be at 4450, we'll call it. So about a 10-point range here, which should act as a gap if broken down underneath that 4460. Again, your target is that 4450. What else do we have here? The other thing I wanted to point out was the fact that this point of control here, so that's this yellow line, is coinciding with the halfback of the prior day, is also pretty darn close to that prior point of control. So if the market is going to roll over here, I would place a lot of emphasis on that 4450 being the area where it should support, and if it doesn't, that's telling you something, right? It should do something like this if it rolls over in the first place and then bounce, but if it doesn't, probably look out below. I would imagine there's room to that daily S&P 50 SMA. That's the SPY chart, which we just discussed. Now, just like we discussed on the S&P chart as well, you can clearly see on the profile that we have good excess highs here, but they're pretty close, right? So that's going to be the same thing as essentially your two-day balance highs. If we take them out, you are looking for higher inside of the S&P 500. Let's move back on over to our other software here, the Thinkorswim charts, and wrap up the broad market with the Qs and then, of course, IWM. So zooming in a bit, again, I want to actually do something something different. We don't oftentimes look at this, but I'll put the 20 SMA on here, which is the white line. And I think it's noteworthy that they defended it, right? At first, early on in the day, I was a little skeptical. It did look like it was breaking down as we were coming into this area here, but obviously there was a ramp into the end of the day, and we've defended by not closing below essentially that daily 20 SMA, which kind of saved the day, in my opinion, for the S&Ps. I'll say the same thing about the sellers running out of bullets here on day 1, 2, 3, never really making huge lower lows, especially more equal lows on the sessions from Monday and Tuesday, punctuated by a lower low, but no follow through, no close below on today's session. So it does look good to me for a potential reversal, noting that we have a larger lower wick and some pretty exhausted sellers, right? None of these guys really got paid too heavily for their aggressive efforts to get the market lower. So we'll watch and see. The long trade here would be back above that 379, we'll call it for round number's sake, 2 all-time highs after that. And then, of course, looking to monitor into blue sky territories. On the rollover, you still have the 50 SMA and the gap underneath, but with the defend of the 20 with the lower wick put in, and as we discussed in the S&Ps, I think there's a chance for higher, right? If you're skeptical, wait for the confirmation break. If you're someone who's looking to short, I would probably just say sit on the sidelines for a second and wait until we really get back down underneath these lows to confirm that there will be more rollover, because as of right now, I'm just not seeing it in the marketplace. Let's take a look at IWM. This one should be interesting, simply noting that we have our prior range. Let me get rid of that 20. It can kind of cause some confusion being so white there, so we'll remove that. There we go. And what you'll notice is, again, same thing that we've been discussing for a number of months, smack in the middle of the range, nothing to be doing here. It's not aggressive risk off, and it's not aggressive risk on until we either get out of the top or underneath the bottom. So I would just say stand aside in the IWM, let it do its thing. The opportunity arises when we get here and or down here towards the bottom. Let's go ahead and get into those trade ideas now. The first one is on PLTR for Palantir, of course, and this is a longer term idea. If you zoom in a bit here, what you'll notice is we have relatively equal highs in this general area, right around 27.13, maybe slightly higher, call it a zone up towards 27.50, just for round number's sake, right? And then, of course, you have a support trend line that's doing something like this. So we are getting higher lows, forming an ascending triangle, pressure cooker top, we like to call it here around the channel. If we get a break up and out of that zone, what you're looking for would be the bottom end of this gap, which is also 2-day highs in there, some balance highs, around $30. So a lot of meat on the bone there, about a $3 trade available to the upside on the break, noting that there's very little structure in this area. And if we go higher, right, the gap technically fills up to 31.36. So keep that on your radar. If you want to look for a potential better entry and you still think the market's going to pull back, maybe your entry's down here towards the support trend line. So just something to be watching, a little bit longer of a trade idea as mentioned. The next one is on OXY for Oxy Petroleum. And this is a bullish trade idea for follow through of the inverted head and shoulders, right? If you notice, let me do something like this, grab the trend line tool, and we'll come in from here. There's kind of your neckline that did break to the upside. Here would be shoulder 1. Here is the head. Here is shoulder 2. Of course, we'll see if we can get some follow through to the upside. Now, what I think is interesting about this trade and why I've included it in today's video, although it's already broken, you'll notice that the energy sector as a whole has really had some solid relative strength recently. So this could be a runner if you're struggling to find a trade idea inside of something like tech or one of those big names that we're generally trading. So keep an eye on it. It is starting to come, or not come, but get a little extended, right, coming from the bottom to the top here. One red day filling the gap, and then back higher on today's session. So I don't know if it's just a blind long, but it is something to be paying attention to here inside of the market as energy remains strong. Next one is on Upstart, so UPST it is, and what we're looking at here is simply a bull flag, right? I have these other drawings. Let me clean that up for us. And what we're looking at is a hold, or hopefully a hold of this area of support. You can see we nicely rallied off of it today at 262.23. The next critical break would be a move above this kind of resistance trend line. And it's not the cleanest thing in the world, but if we can take that out, right, start getting back into these highs, that would be a sign where this bull flag is starting to materialize to the upside. Not interested in the trade, obviously, if we break down underneath that support that we have in place. And to the upside, you'd really be looking at a target. If you want to play this one technically, right, what you do is you look for a break comparable to kind of the rally size of the move, right? So something like this could ideally take us up into that, let's call it 335-ish area. I mean, don't get me wrong, that's quite the trade here. So probably just trail a stop higher, but seeing if we can get some more upside out of this bull flag from an overall daily structure perspective. Next up, we'll take a look at MSFT for Microsoft. And this is obviously one that we cover every single weekend for the weekly watch list there. But what you'll note is that we simply have a pressure cooker top building now at the top end. then just below all-time highs. So a break of 305.53 puts us into blue sky territories, monitoring for whole and half dollar resistances, any intraday levels that do form. Again, keep in mind this has come from the bottom all the way to the top, so ideally gives us a day or two of consolidation, then the break happens after a higher low, but keeping an eye and probably set an alert at that 305.50 area on Microsoft. Not interested in the trade if we don't get the breakout, right? This is a breakout trade, not one where you're looking for pullback buys, in my opinion, because it can probably chop in between this range still as tech sort of figures out what it wants to do. And then the last trade idea is more of a rangy trade idea as well, and that's on BA for Boeing, of course. And if we just zoom in a little bit, what you'll notice is we have yet again another, how many days? 1, 2, 3, 4, 5, 6, 7 days of balance here after a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-day balance. So all things considered, it's doing a whole lot of balance. But if we can get out of this range, then clearly there's just room to move to the top end of the prior range, right? And here at that 223 area. So that's one idea, or you could play the breakdown if you have a more bearish stance here in the airlines. That would, of course, require a retest of the bottom here and probably flushing underneath these lows close to 211. So however you want to look at it here, Boeing is going to have an opportunity sooner rather than later, moving outside of this 7-day balance. So keep it on your radar as something to watch. So that's going to wrap up the video. If you enjoyed it or learned anything new, certainly let me know down below in the comments section or by giving the video a thumbs up. That being said, we wish you all a green trading week.